What's up traders, welcome back. Today I'll be going through the breakdown of the trade that I've executed on Nasdaq. I also will be covering the technique that I've used to avoid being skeptical about the directional bias that you're trying to follow. So let's go. So we have agreed in the past that our daily bias is derived from the daily time frame. So this is the price action that I had in front of me on this trading day. So let's go through the order flow. So first, we need to find the most recent stop hunt or price rebalance and the most recent market structure shift on this time frame, which is very easy to spot. You don't have to go too far back, but I'm gonna do it for the sake of this teaching and to demonstrate how everything repeats itself. So we have a very obvious stop hunt or liquidity run right here, leaving an order block that gets rebalanced or traded to the same time before causing a market structure shift. It also left a fair value gap inside of the range that got visited same time or acted as support. Look how everything repeats itself. We have another stop hunt or liquidity run below the swing low, forming an order block and leaving a fair value gap behind before a market structure shift. This time we have two fair value gaps inside of the range. We traded into the top fair value gap many times, forming a consolidation or liquidity above and below the price, and then the cycle repeats again. We have another liquidity run, trading into a fair value gap and also an order block, at the same time forming a new order block to repeat the cycle, leaving a new order block behind and also a fair value gap before the market structure shift. Since we are close to our trading day, let's zoom in. We traded into the fair value gap again with a combination of an order block and shifted higher while repeating the cycle. The cycle goes like this: market structure shift, fair value gap inside of the range, a revisit to the fair value gap, and trade away. This is a Sunday candle, by the way, that's why I ignored it, it doesn't exist. That's why I used the next candle. And then the cycle repeats again with a market structure shift, a fair value gap, this time with an order block, revisit and trade away. Now this is the day that I took the trade. Now you have to write things down. Our first step is finding the most recent stop hunt, which is this one. The second step is to find the most recent price rebalance. So we got this one right here, because it's rebalancing this fair value gap. So what do you notice every time you trade into a fair value gap? It acts as support, because every time you trade into it, the price always rejects and bounces and trade away. On this current trading day, we have already traded into our recent fair value gap, which has provided us with a rejection, which is indicated by this green candle. That green candle is showing the willingness to trade away, which is trying to complete the cycle. We don't yet have a market structure shift, so we are anticipating for it to happen. So this means on the next trading day, I'm anticipating the day to close with the green candle, which is directional bias within itself. So since we are anticipating a green candle, I'm looking to take bias below the current day's opening price, because this is where manipulation occurs. Let me elaborate. For whichever currency pair, indice or commodity that you are trading, the manipulation of the price is always going to take place on the opposite side of the opening price. So let me demonstrate. We have the opening price, which is at the beginning of the trading day. We can use the New York midnight time, like here in this demonstration. When the candle opens, what will happen is the following. We are going to have an accumulation phase, which is the consolidation that occurs the whole day prior to our trading time or kill zone time. During the kill zone time, which is the only time you should trade, you'll find the manipulation that will send price into the manipulation area, which is below the opening price. This will make you think that the direction is bearish, because the daily candle will now be red or bearish. Before you realize that you're actually bullish, it's going to be too late, because the algorithm is going to leave that area so fast, and if you took any sell orders, you're going to be stuck in that area. So when price start trading into the intended direction, it's called distribution. So this will make the high of the day and consolidate and start the cycle all over again. So the lesson here is that you should take your trades in the manipulation area which is below the opening price if you're bullish. If you're taking sales, it should be above the opening price. So let's look at the lower time frame and my entries. So we're on the 5-minute time frame. We have a clear consolidation from the opening price because the price didn't go anywhere. So it was busy accumulating orders and hugging the opening price. So it's very important to have this line on your chart. Otherwise, you can use this indicator right here that shows you how the current daily candle looks like while you are looking at other time frames. So if you guys want this indicator, you can mention it in the comment section down below. You don't actually need it though. I'm also not using it, but it's a good reminder to always remember how the daily candle looks like. So let's continue. So as always, we always have a news event that's going to be used to manipulate you to trade into the wrong direction. So as you can see, with that big whipsaw candle, that was the news release. The all-time price was hugging the opening price line, and then all of a sudden, with the news release, it went below the opening price, which is our manipulation area. So when you look at all of this without any lines, you'll think that price is bearish. So if you don't use your daily time frame, you're gonna fall for it. So this move below the opening price was also a stop hunt. So you can see that they've used the news to send price below the opening price, which is also to run the stops. So you can see that all of this is happening before 9:30. So obviously we know what happens every day at 9:30, which is the New York Stock Exchange time. There's always a volatility injection exactly at the time. So this is what I did. Because they have already used the news for manipulation, I was expecting expansion away from that area at 9:30. So I used this candle as my order block once we closed above it. I took a buy, understanding that we were below opening price. So as you can see, we had a push upwards with 2 market structure shifts, leaving a fair value gap within the range. Doesn't that sound familiar? You know exactly what to expect next, since you have seen this pattern happen so many times on the daily time frame. Remember that the price is fractal. So we traded back into the fair value gap while also testing the opening price too. That's when I added more trades, understanding that I'm bullish. If I have positions below the opening price, I like to target 100 pips if I don't target a buy side liquidity. We also had another market structure shift, leaving a fair value gap within the range. That's when I added more trades. My entry levels weren't that accurate because of the spreads of the broker that I was using, and also because I was using market execution. So I got my 100 pips with reference to the first entry that I took. That's when I closed everything. So there you go guys, that's it for this video. If this is useful information for you, join the club by subscribing. Also like the video if you appreciate the effort. Otherwise, I'll catch you in the DMs. Until we meet again, that's Vidania.